So I'll speak to the worst one that I was a part of, though it wasn't actually mine, thank God. A colleague of mine led an investment in an e-commerce company, and there were some questions at our partnership level about the product and the vision for the product long term. And in the first board meeting, the CEO looked at the board and said, "Okay, guys, we raised $7 million. What should we do next?"
Oh, dear.
And the company promptly went down and to the right from there. So that was bad. And so the takeaway, the learning for me as an associate on that deal was, to be very, making sure that there's a long-term vision, given that where we're investing, that's emanating not from like where we think it should go, but is emanating directly for the company, and that they have a vision that they want to execute on for the long term.
I think, so I started my venture career in Palo Alto on the West Coast, and so this was 98 when I started. And I think the investment that I'll choose is the one that I had such high conviction on, and everything looked right, and I learned on that one that you just never know. And this is why this business is the ultimate apprenticeship business. You learn by doing over and over again, and that's how you create that sense of smell. This is a company that went public. I got it public. And so everything looked right, got it public, and what happened was the market melted down, and that company ended up distributing cash back to shareholders. So what it just, you don't make money until you sell. So we were under lockup, we couldn't sell, and we got cash back, but it was 90 cents on the dollar. We didn't even get our full cash back. So it's not a bad investment, but it was one that was just everything had gone right until, right? So that's just one of those lessons I carry with me.